Today, Bitcoin prices on a steady march higher. Plus, remember Mt. Gox? All that stolen Bitcoin from 8 years ago might be hitting the market soon. And miners are selling crypto. What does that signal for investors? Welcome to CNBC's Crypto World. I'm Pippa Stevens. Let's update everyone on price moves. Bitcoin crossing into the $20,000 range, ending up at $21,000 by noon Eastern. It's been marching higher all week. Ether, though, down a bit in the past few days to hover around $1,200 after yesterday's big spike. In the world of altcoins, Polygon having a big week. Its Matic token rose above 25% in the past 7 days. Okay, let's talk about today's top stories in crypto. First up, Celsius is catching a lot of heat in a new lawsuit. The crypto lender is facing allegations that it artificially inflated the price of its digital coin, failed to hedge risks, and basically ran a Ponzi scheme. That's according to allegations in a lawsuit from former investment manager Jason Stone, filed in a New York state court. Celsius was not immediately available for comment on the lawsuit when contacted by CNBC. Celsius made money by offering high yields to crypto holders who deposited their digital assets with the firm. It then lent out those deposits at a high interest rate. Celsius has been caught up in the liquidity crisis hitting the wider crypto industry. Stone's lawsuit accuses Celsius of not having enough capital to repay older depositors and creditors because of big losses in its Ether holdings. Allegedly, Celsius jacked up interest rates to attract new users in order to repay the older ones. When crypto prices began to crash a few weeks ago, Celsius paused withdrawals because of, quote, extreme market conditions. Next up, the Federal Deposit Insurance Corporation, or the FDIC for short, is looking into collapsed crypto firm Voyager Digital. According to Bloomberg, Voyager is facing scrutiny that it deceived users into thinking it was insured by the FDIC, which is a consumer protection agency that insures bank deposits. Voyager allegedly played up its relationship with crypto-friendly firm Metropolitan Commercial Bank. The FDIC told Bloomberg that only Metropolitan was insured, not Voyager, which went bankrupt last week. And finally, Mt. Gox may seem like ancient history, but it's now back in the headlines. All right, so 8 years ago, the Japanese crypto exchange imploded after once holding about 80% of the world's Bitcoin trades. Then it lost 850,000 of them, about $500 million back then. Its CEO went to jail in Tokyo, and only a fraction of the missing Bitcoin has been recovered in the years since. But some of those Bitcoin holders may be getting paid back. According to CoinDesk, a lawyer involved in the Mt. Gox rehabilitation case announced that they may start making repayments to former account holders who can accept outstanding funds in Bitcoin, Bitcoin Cash, or regular old fiat currency. A date hasn't been set for the repayments, but some crypto investors are watching out for one. And that's because since Bitcoin was worth a lot less back when Mt. Gox imploded, there's a concern that these recovered digital assets will flood the market once the payouts start up and cause even more volatility. According to Bloomberg, the bankruptcy trustee holds about $9 billion worth of recovered Bitcoin from Mt. Gox. All right, on to our main story of the day. Crypto miners are turning into crypto sellers. Check out this chart from CryptoQuant. It's showing the volume of Bitcoin flooding markets after crypto miners offloaded them. If the selling trend among miners continues, then it could put more pressure on digital asset prices during the so-called crypto winter. Crypto World's Tanaya Macheel spoke with CryptoQuant's Julio Moreno about the trend and how it might affect prices.
So the price of Bitcoin fell to a low in June of somewhere around the $17,000 level. And in that same month, we saw that big spike in Bitcoin miners who were moving some of their reserves to exchanges, this miner capitulation, we're calling it. So what exactly does an event like that tell us?
Well, it tells us that miners' profits are being squeezed on the one hand because of we have lower Bitcoin prices, so their income, their revenues are lower, and then for the other hand, on the other hand, we have higher difficulty of mining, so their costs are continue to be high. So that's why their profits are being squeezed, and you see miners selling their Bitcoin reserves to add up some revenue and be able to pay their expenses.
Is it safe to assume that they are selling? And do we know anything about why they're selling? Is it just because they're looking to take, um, some profit? I know that you were looking at some metrics about how overvalued or undervalued the Bitcoins are at these prices. Or is it a case where miners are just looking to sell so that they're able to keep financing their own operations with, I think I read something I know yesterday about the cost of processing or mining a Bitcoin actually being about the same or more expensive than the price of Bitcoin itself.
Yeah, so for some miners, the price has gone up to the point that there is lower than their mining costs, and we have seen this in these miners that are publicly traded. There have been announcing that they're selling some of their Bitcoin reserves, and so we think that is because of this profit squeeze, and they need to finance their operations. So they sell their coins to have more cash on hand, and we also see in this in the data that we track. We track Bitcoin that is moving from miners to exchanges, and this kind of data had a spike, a really important spike in during June. And so we typically assume that this move of coins from miners' reserves to exchanges is to sell their coins, and we can actually see that.
To what extent is all of that selling adding to the overall crypto market or to the Bitcoin network? I know you're also tracking miner sell pressure. What exactly are you seeing there, and what does it say about the state of the Bitcoin network today?
Well, yeah, the miner sell pressure is an indicator that we developed that tracks the cumulative flow from miners to exchanges during a specific period of time. So, and we saw this also spiking in during June because miners selling their bitcoins or sending their bitcoins to exchanges. And this typically has implications for the market, as typically miners sell at the bottom of the market cycle, or at the start of the bottom of the market cycle, and we're seeing a sign of this in this minor capitulation and money selling pressure metric.
Do you believe that that's what's happening now, that we're at or near a bottom?
Well, it's difficult to say exactly. The macro environment is not specifically supportive of this, but on the other hand, on the on-chain data and the flow data, it's just telling us that there are some signs of that.
Can you give us a little bit more context about this type of event? So you're saying that on the one hand, it might be the sign that we're at or near a bottom. I guess, when was the last time that we've seen an event like this happen in a meaningful way?
We have seen this a few times during the Bitcoin's history. The most recent was at March 2020, when the pandemic hit and we saw this market sell-off. As the price of Bitcoin decreased almost 40% in just one day, we saw also these type of spikes in minor flows from their reserves to exchanges. Also, we have seen this in the near the cycle bottoms of the market in 2019 and also in 2015. So, and it's not just a one-time event. It could happen many times during the bottom, but it's a sign of bottoming, or has been in the past a sign of bottoming.
On the flip side, what is the worst case scenario in terms of what can happen next or a while from now if prices stay this low for an extended period?
Even at these low prices, if you see the hash rate of the network, it hasn't decreased a lot. It's just decreased just about 10%, and prices are down 70%. So I guess from that standpoint of view, miners are still operating, still mining, and also, you know, these big companies, these big miners, they don't shut down really quickly because they have to continue to operate. They have contracts, they have expenses that need to cover, and they also have in place orders in place for new equipment already. So it's not that easy just to shut down an entire operation.
That's all for Crypto World this week. We'll be back again for more crypto news on Monday, and we'll see you then.